Chat for a minute about the due diligence process. It can be a very complicated process, and a good business broker can help you manage it successfully. It starts with a non-disclosure agreement. Any investigation requires confidentiality, so the NDA is important. Parties need to be confidential about information. The request also includes a brief bio. The owner is going to want to know why this potential buyer wants to buy the business, the same as the potential buyer will want to know why the owner wants to sell the business. So there needs to be a meeting of the minds as to why buy, why sell the business. Also, some brief financial data is important. Are you really looking at the right size or right scope, right price of business for your checkbook? And then you get into the due diligence process itself. It starts with basically a profile of the business, which kind of summarizes in 3 or 4 pages what the business is all about and gives the potential buyer an overview of the business. If after reviewing that, there's still an interest, well then it's time to sit down with the owner and consider and look at more details of the business and take a look at a confidential business review, which is the real details of what the business is all about. And if at that point in time there's an interest, before you really get into the gory details and the final set of numbers, it's time for a letter of intent. Can the potential buyer and the owner agree on the price, terms, structure of a deal? And given that, we move forward with an in-depth review of the business and the financials of the business, the operations of the business, and a good business broker can really help with that part of the process. The owner needs to run the business while the business broker works with the buyer to analyze the business. If it all comes together successfully, we move on to closing and a purchase of a business.